Google's Gemini 3.5 Pro launch arrived, and Google reportedly showed up late, cutting 4% off Alphabet and dragging chips into a third-day rout, plus 4 more stories moving the tape. Let's get into it. The July 17th target for Gemini 3.5 Pro landed today, but Bloomberg reported Google is behind schedule on its most powerful model, and Alphabet fell more than 4%. Google's own May 19th post still lists Pro as internal only. No benchmarks, no context window, no pricing confirmed. This is Google's full architectural rebuild after scrapping the original base model, its direct answer to GPT 5.6. So a stumble here dents its frontier claim right as the field's leadership is being questioned. The bear case: the model has now reportedly missed 3 straight deadlines, and every 2 million token DeepThink spec remains reported, not confirmed. A stopgap release would signal the real thing isn't ready. The forward signal: if Google ships confirmed benchmarks that top GPT 5.6, the delay is forgotten. If it's a stopgap with no numbers, expect the frontier doubt narrative and this chip sell-off to harden. The AI trade extended its rout into Friday. NASDAQ 100 futures down as much as 1.6 to 2%. Chips leading a third straight session lower. Thursday alone, the SOX index fell 4.5%. Supermicro dropped 8. Intel nearly 6. AMD over 5. But the catalyst shifted from one name to the whole sector. TSMC beat on Q2, yet raised 2026 capex to $60 to $64 billion from $52 to $56. And the tape is trading that capex number, not the beat, on fear that infrastructure spend is outrunning monetization. The Gemini delay poured fuel on it. The bear case: this is the first sustained crack in AI leadership since the early July highs. 3 down days is a trend, not a dip. The forward signal: watch whether next week's cloud prints show revenue catching up to capex. If they don't, the spending ahead of monetization thesis spreads. Netflix posted Q2 revenue of $12.56 billion, up 13.4%, and apps of 80 cents. But revenue landed just under the $12.58 billion consensus, and Q3 guidance of roughly 12% growth came in soft. Shares dropped another 9% after the bell. The read-through matters well beyond streaming. Even a durable consumer franchise gets repriced the moment ad and engagement growth decelerates, the exact caution flag hanging over this week's AI monetization debate. The bear case is that the stock was already down about 45% over the trailing year, and operating margin slipped to 33.4% from 34.1%. This isn't a one-quarter wobble, it's a repricing. The forward signal: if Q3 ad revenue reaccelerates, the growth story survives. If that 12% guide holds or slips, Netflix becomes the template for how this market punishes decelerating growth across tech. The World AI Conference opened in Shanghai today with over 300 product debuts, headlined by Huawei's Atlas 950 Supernode, a direct challenger to NVIDIA's cluster hardware. Alongside it, 29 countries signed on to a Beijing-led World AI Cooperation Organization. China's domestic compute stack keeps maturing: Minimax's M3 model, an agent operating system, near-memory 3D chips, right as U.S. export policy on NVIDIA to China is loosening. The more credible Huawei's silicon looks, the weaker the case that China needs NVIDIA at all. The bear case: much of this is state media framing. Western Tier 1 confirmation of the 29-nation pact wasn't available at publication, and every Atlas 950 benchmark remains China-sourced. The forward signal: if independent testing shows Atlas 950 closing the gap on NVIDIA clusters, the NVIDIA China revenue thesis, already this week's sell-off casualty, takes another hit. Anthropic began pre-roadshow investor meetings this week, targeting an October listing under ticker ANTH at a roughly $965 billion valuation, and crucially, ahead of OpenAI, which is now reportedly eyeing a slip into 2027 after SpaceX's rocky debut. This is a race for the first-mover premium. Anthropic's confidential S1 hit the SEC June 1st, alongside a $65 billion Series H, and a public filing could land in August or September. Q1 data even shows Anthropic edging OpenAI on LLM revenue share, 31.4% to 29%. The bear case, a $965 billion valuation on a company targeting break-even only by 2028, is priced for flawless execution. And a soft IPO tape, the same one delaying OpenAI, doesn't discriminate. The forward signal. Watch for that public S1 in August or September. If the market that just repriced Netflix and chips is still shaky, even Anthropic may find October a hard window. The through line today is one word: monetization. Gemini's delay, TSMC's CapEx, Netflix's soft guide, and every chip on the tape are all asking the same thing: whether AI spending is outrunning AI revenue. Next week's cloud prints start to answer it. I'm Ted. This is the Daily Alpha. Subscribe, and I'll see you tomorrow.